Good morning, students. Good morning, Suprabhat, Sasri Akal, Namaskar, Kem Cho, Vadakkam, etc., etc. So I believe you all must be studying very hard to achieve the goal of your life to become a chartered accountant as soon as possible. So I am C. Ankit Sharma, your income tax faculty for the session. And today we will be discussing the numerical part of basic concept, in which we will go through with the rates of tax provision, surcharge provision, rebate provision, etc. So that is going to be more interesting in comparison to our first session, because that was pure theoretical on the basis of definition, fundamentals, introduction, etc., etc. So I believe you must have gone through with the provision, you have revised the topic, what we have covered in our first session. And as I have asked you that I would like to listen that you've gone through with the provision or not. So I would like to explain certain things from any one of you. And if any one of you want to explain these things in very short, so that would be very good for our class. That would be an interactive session. So good morning, Dhalakshmi. Good morning, Surinder. Good morning, Amit. Good morning, Mithali. Good morning, Gayatri. Good morning, Sridhar. So first is I want to know that what's the difference between previous year and assessment year. So definition of previous year and assessment year we have gone through in the last class. So who will explain in short the difference between previous year and assessment year? You can raise your hand, so you will be unmute, and then you can explain these previous year and assessment year difference in short. So who would like to explain? Vishakha, Sridhar, Gayatri. First raise hand by Vishakha. So Vishakha, you please explain in short, please, the difference between assessment year and previous year.
Good morning, sir.
Good morning.
So the previous year, the year in which income is earned, and the assessment year is the year in which it is taxed.
Yes, absolutely correct. Very good. Now, Sridhar, you can you explain the difference between the Dayabhaga School of Law and Mitakshara School of Law? Sridhar, I would like to unmute you.
Good morning, sir.
Good morning.
Dehbaga School of Law is apply only West Bengal and Assam. Uh, it is apply after the death of the parents or guardians. And Mitaksha School of Law, it is the owner of at the birth of the birth in the family. And it is apply all over India except Assam and West Bengal.
Okay, good attempt. But you have just mistaken at what point? In case of Dayabhaga, not on the death of parents or guardian. It is on the death of father only. So parents includes mother, father both. But in case of Dayabhaga, you can create it only on the death of father. Okay. And in case of Mitakshara, you can create on birth of child or even after marriage. So husband, wife can also create Mitakshara Hindu law HUF. Okay.
Okay, sir.
Very good. Next is who will explain the difference between AOP and BOI? Gayatri, you would like to explain the difference between AOP and BOI? Yes, Gayatri, go ahead.
Yes, sir. AOP is when two or more firms come together for a certain purpose or action. They have a common purpose, and in BOI, they are individuals who have to work together as a trustee or as someone to look after a firm.
Very good, very good. Well done. The easiest way to explain the difference between AOP and BOI is AOP is unregistered organization. So when there is no registered agreement, when there is no agreement which is registered, that an income has been divided by more than one person, two or more person, that is going to be AOP. But in case of BOI, there would be some legal registered document. In case of AOP, the person who those are dividing the income are the technically owner of that income. In case of BOI, they are the caretaker. Well done, Gayatri. Okay, now last question I would like to ask that can you explain the components of income tax? Any one of you would like to explain, not the detail of those components, just the heading. The components, which is for income tax components. Lanka is want to explain. Yes, please go ahead.
So the components of the income tax law in India, first Income Tax Act 1961, Annual Finance Act, Income Tax Rules 1962, circulars or notifications, and legal decisions of courts.
Very good. High five from Wi-Fi to all of you who explained beautifully. So I believe you all have revised the provisions. Well done. Very nice. So now there would be 10 MCQs and we are going to discuss these MCQ on the basis of the topic we have covered in our last class. Okay. So basic chapter 1 MCQ we are discussing. This is question number 1. Which entry and article of the Constitution of India given the power to the Parliament to make law on income tax? So which is the correct entry which give the power for the Parliament to make law on income tax? Okay, so multiple answers are here. B is saying someone, Sridhar is saying A, Mithali is saying C, Gayatri is saying C, Vijwal is saying C, Sushmita C, Amit is saying B, Vijwal is saying triple C, very good. Mehak is saying B, Meenu, Kashish, Vyagya is saying C. Entry 82 is by Mehak, Surinder is C, Gaurav is C. The correct answer is option number C. Entry number 82 of Article 246 is the correct answer. Okay, well done. Next is, which list give power to both state and parliament? Now let me tell you, when you give the answer of your MCQ, kindly write it down the MCQ number. Because if somebody is sending me answer late and option is C or B, whatever you are writing, I would not be able to understand which question answer you are sending. So please write it down 2 and then C or 3, C, B, whatever it is. And we know that the correct answer is C. Very simple question. Concurrent list is the list in which both state and parliament have the power. Well done, students. Very good. So I'm feeling very good that you have revised your provision very nicely. Next is, who is empowered to make rules for carrying out the purpose of the act? Question number 3. So in case of income tax, CBDT, Central Board of Direct Tax, is the authority which actually empowers to make rules for carrying out the purpose of the act. So of course the correct answer is B. So these are very simple questions. After question number 10, when we will complete our numerical part, the questions will be little difficult. Question number 4. Mr. Sudeep let out his building to Mr. Vinal for 2 lakh rupees per annum. Mr. Sudeep deposits such 2 lakh rupees in his bank account and also earn bank interest of 15,000. So technically, Mr. Sudeep is earning 2 income, 2 lakh rupees rental income and 15,000 rupees is interest income. Now the question is this, in which head of income these 2 lakh rupees and 15,000 will fall? So you have to answer in which head of income these 2 incomes are going to be taxed. You have 4 options, A, B and C and D. So you have to tell in which head of income these are going to be taxed. So Vijwal is saying D, Tanisha is saying D, Akila is saying B, Nidhi is saying D, Vagya is saying D, Gaurav is saying D, Surinder is saying D. Very well done. The correct answer is, of course, D. Because this 2 lakh would form part of income from house property, because building rent is going to be taxed under income from house property. And interest income is the income which does not include in any other of 4 heads: salary, house property, business, and capital gains. So any income which does not fall in any of these 4 heads will form part of income from other source. The correct answer would be option number D. Now, this is interesting, which is not included in the definition of person. Out of these 4, which is not included in the definition of person, Gayatri is saying D, Akila is saying C. As we have discussed, you cannot escape from the definition of person. So even a robot or AI is running your business, that is going to be the part of artificial judicial person. So you cannot escape from the definition of person anyhow. So that is going to be included in AJP. So the correct answer would be option number D. Now question number 6. Which of the following statement is true? Previous year always of 12 months. Previous year always less than 12 months. Assessment year can be less than 12 months, or assessment year always of 12 months. Gayatri is saying D, Tanisha is saying D, Sushmita is saying D, Meenu is saying D, Monisha, Gaurav, they are also answering D. The correct answer is, of course, option number D. Look, in case of a new business, the previous year could be less than 12 months. Suppose we have started a business on 1st of November 2025. So in this case, previous year would be from 1st November 25 till 31st March 26. But the assessment year in this case would remain from 1st April 26 till 31st March 27. Even if you are an old business, or we can say existing business, in that case, your previous year would be from 1st April 25 till 31st March 26. And the assessment year would remain the same. So, previous year could be less than 12 months or up to 12 months. But assessment year will always remain of 12 months. So, the correct answer is D. Next is, like this question is of course related to question number 6. If business start from 10th May 2025. So what is the previous year? Of course, option number C. As simple as that. Income tax came into force from which date? The correct answer is option number B. So these are very simple questions just to see whether you have completed your provision, what we have discussed in the first class. Income tax is charged on every person. So the correct answer is option number A. Now last question. Which of the following is binding on both assessee and department? So which is the correct answer? The correct answer is B, notification. Circulars are binding on the department but not upon the assessee. But the notifications are binding on both assessee as well as department. Okay. So these were the MCQ we have just gone through. Now, of course, before starting of the class on the basis of notes, the thought for the day for all of you is this: do or do not, there is no try. So now you have already cleared your foundation. Now you are in intermediate level. So now there is no backing off. You have to be a C sooner or later. So now there is no try left. Do not even think about that you are going to leave this course if you have not cleared in 1 attempt or 2 attempt your intermediate. No. So now please focus that you have to be a chartered accountant, whether later or sooner. Try to be sooner as soon as possible, but still, now you are in this situation that there is no backing off. So once you have decided to do something in your life, when you have set your goal in your life, when you have fixed your goal that I have to be this, then there should not be any backing off. There should be proper planning. proper strategies. I believe there are 4S strategies. Study, first S. Then sincerity. Study is not important. You have to be very focused when you study. So only having books in your hand for 13, 14 hours in a day does not mean you are studying. So how much output you are having out of those time limit, that is very important. So study, sincerity. Then third is sacrifice. You have to sacrifice parties, etc. Maybe your friends, those are doing BCom, etc. They are doing party on different occasion, but you have to be very, you have to ignore all these things. So very disciplined. So study, sincerity, sacrifice, and strategy. So management also important. How you will complete your course, how many times you have to do revision, you have to complete your MTP, RTP, mock test, etc. Past year question papers, how to attempt paper in 3 hours, etc. So that strategies are also very important. So if you are able to do study with sincerity, with sacrifice, with strategies, that is equal to success. And that success is CA, prefix before your name. So you all can be CA. So please now believe in yourself that you will be a CA. There is no backing off. So that was the thought for the day. Now we are moving on to the provision part of today's class. So in the last class, we have discussed about the definition of previous year in assessment year. And there was a common rule. And the rule was saying that the income you have earned in previous year is going to be taxed in the next year, and that is called assessment year. That is a general rule. Income of a previous year is assessed in the assessment year following the previous year. But now we are going to discuss some exception to this rule. So that means there are certain cases, there are 5 cases in which the income of previous year is going to be assessed in the previous year itself. So that is going to be assessed in the previous year itself. Now, why it is happening? What is the reason behind it? So the reason is something different. Suppose there is Mr. A who is earning salary of 10 lakh rupees per month working in India. So in the month of November, he had an opportunity to join a job in USA. So he got an opportunity to having a job in USA from 1st of December 2025. He can join this job outside India. So he have decided to leave India permanently and going to settle in USA with this job. So in this year, from April, May, June, July, August, September, October, November, for so those 8 months, he have earned 80 lakh rupees salary in India. So now when he is leaving to USA on December 2025, he has already earned 80 lakh rupees income in India. And now he will earn income outside India. So when he is leaving India, income tax department will ask him to pay tax on this 80 lakh rupees. So what will be his excuse? He will say, this is 80 lakh and this 80 lakh I have earned in this year. So technically this is the previous year of my income. So I will come in next year in the assessment year, as your rules are like that, that assessment year would be the taxing year. So my previous year is this year, 80 lakh, I will pay tax on this 80 lakh in the next year. So I will come in next year and I will pay tax. So if government or income tax department will allow him to leave India without paying tax, expecting him to come back and pay tax in next year. So do you think that in all cases, they will come back and they will pay tax into India? And even if they are not coming back, is it feasible or easy for the income tax department to collect tax from someone who is not in India and now is outside India? Practically, it's not easy. So in these kind of circumstances, if somebody is leaving India in the previous year, what is more feasible? Collect tax before he is leaving India or wait for him to pay tax in next year? And if is not, then try to collect tax from outside country in the next year. So what is the easiest way in this case? Of course, in this case, you can collect tax when he is in India. So you can see when we say that in certain cases, you have to pay tax in the previous year. So there is no wrong intention of the income tax department. But this is the case when income tax department knows that if we won't collect the tax in the current year, so it would be very difficult that we are going to recover the tax in the next year. So all these 5 cases, what we are going to discuss is based on this thing that if we are not able to collect tax in this year, we won't be able to collect tax in the assessment year. So now you might understand why these provisions are here. In all these 5 things, the basic intention is only this, that government knows, जैसे हिंदी में कहते हैं ना, अभी नहीं तो कभी नहीं. So exactly the thing is this, it's now or never. So there are 5 cases. First is shipping business, then person leaving India. The example we have discussed for this case. So we are going to discuss all these 5 cases one by one. Cases in which income of previous year is assessed in the same year, or exception of the rule that income of previous year always taxed in assessment year. So the first case is non-resident shipping business under section 172. Now, who is non-resident? So resident, non-resident is a very specific term, and we have detailed chapter number 2 regarding this resident and non-resident. So what exactly non-resident is, we will discuss in detail in chapter number 2, but for the time being, let me tell you, those who reside outside India is non-resident for our country. So now the question says a non-resident shipping business under section 172. Suppose, let me explain you with the help of a diagram. Suppose there is Mr. A who is a non-resident who lives in USA, and he's running a shipping business. So he transport the goods via ship. So suppose this is his ship. So he comes to India, deliver the goods into India, and he charged rent. So he's in a transport business of goods and carriages via ship. And he charged from Mr. B, suppose 1 crore rupees as a freight. Now, after earning 1 crore rupees from Mr. A, from Mr. B as a freight, he is going back. So now government knows if he has gone back, then we would not be able to collect the tax on this income. So the provision has been made that if there is a non-resident who is in a shipping business, who earns income in previous year from India, then he has to pay tax before leaving India. Now, how we will calculate the income and tax on it? Because this 1 crore is his revenue, not the profit, and we will charge the tax on the profit. So he will say that this 1 crore rupees is my revenue, and you need to charge tax on the profit. So I am not sure how much is the profit out of this receipt. So I will need to go back to my office. I will calculate the other expenses, and at the end of the year, I would be able to calculate the profit. So then I will come back and I will pay tax. So that would be again the same problem. So government says, okay, we have make a fixed percentage that we will take 7.5% as your net profit. Whether your real net profit is higher or lower does not matter. But government and income tax department has made a specific percentage, fixed percentage. Where in case of non-resident shipping business, whatever would be the freight, 7.5% we will assume as your net profit. Now understand, this is net profit, not the tax. Now we will calculate tax as per the rates of tax on this 7.5%. So either you need to pay tax on this 7.5% or you need to make prescribed arrangement. That means someone else in India will take the responsibility of paying tax. So either the non-resident shipping business owner will pay the tax, or in India, somebody will take the responsibility for paying the tax on this income. And of course, the person who is taking the responsibility must be some known person who's having that much net worth, etc. Golty analyst saying that everything will be basis on lucrative figures and not absolute figures. Yes, we can say that. This is law. We have to follow it. Okay. So these are the provision. A non-resident who is carrying on a shipping business comes to India and earn income. For that, then before leaving India, tax is charged on such person, or such person has to make prescribed arrangements for paying of such income tax. So that prescribed arrangement means someone will take the responsibility. In this case, 7.5% would be treated as his income and tax is going to be charged on that income. The second case exactly the same as we discussed in the starting when it appears to the AO. AO is assessing officer. So we call the income tax officer as assessing officer. Maithili wants to ask something. So can we unmute Maithili? Sumit is asking someone who take the responsibility, he is deemed assessee. Yes, he would be treated as deemed assessee. That would be as an agent, etc. Absolutely right. Well done, Sumit. Maithili, please raise your hand. You wanted to ask something. Monisha is saying, sir, we do not have this info. Yes, you have information in this study material. We are discussing all the provision on the basis of your study material. I can tell you the page number also. Monisha is asking for the 1.47, page number 1.47. These provisions are there. Okay. Maithili asking, sir, that 7.5% is charged from which amount? The 7.5% is going to be charged on the freight. The freight we have charged. Suppose you are a non-resident and you are carrying a shipping business. You comes to India with goods, etc., and you deliver those goods into India to someone, Mr. B. So you will charge a certain amount from Mr. B as a freight. So suppose you charge 1 crore rupees as a freight. So 7.5% on the freight value. The freight, 7.5% of freight would be deemed as your income. Okay. Sumit is asking, can you please give example of freight? What does that mean? Example of freight? We have just discussed an example. Freight means freight, transportation charges, Sumit. Yes, Mithili, on 1 crore 7.5% we can calculate. So that would be 7.5 lakh rupees. Chalo, when it appears to the AO that any individual may leave India during previous year and has no intention to came back. So if you are leaving India permanently, then only they will ask you to pay tax in the same year. So if you are going outside India for any marriage, occasion, temporary purpose, then these previous year income collection in the same year would not be applicable. So that was example as we have discussed. Now, assessment of AOP, BOI, AJP formed for a particular event or purpose. So if there is any AOP, BOI, AJP has been formed, and that is only for any particular purpose, like suppose any foreign singer, performer is coming into India for any performance or any event, and after that event, that AOP, BOI, etc. is going to be dissolved and they will going again out of India. So in that situation, government will not be able to collect the tax. So in this case, if any AOP, BOI, AJP is formed for a particular event and will dissolve in the year of formation, then their income will charge in the same year in which it is formed or earned income. So very interesting example has been given over here. Basic theoretical provision. You can go through it with the help of an example. You will understand what exactly the meaning of this section. Point number 4 is also like that. In all these provisions, the basic intention is same. Income tax thinks that if we are not able to collect the tax in the same previous year, then maybe it would be very difficult to collect the tax in the assessment year. Point number 4 and 5 also regarding this. Point number 4 says assessment of person trying to transfer his asset with a view to avoid tax under section 175. So if it appears to the AO, assessing officer, that means income tax officer, that any person is likely to charge, sell, transfer his asset to avoid tax on his total income, then the total income of such individual of previous year shall be chargeable to tax in the same previous year. So the point number 4 says, suppose Mr. A is transferring all his asset like building, land, car, jewelry, etc. Everything he is transferring in the previous year. Everything. So it's a very rare thing that if any person is transferring everything whatever he has in the previous year, and even if he is transferring his land or building, so either he is going to buy a new one, but if somebody is not buying anything and just transferring anything whatever he has, in that situation there could be an intention that after transferring everything he could be vanish. He could shift anywhere in India, not even going outside India. India is a big country. So suppose somebody is living in Delhi and transferring all his building, asset, etc. And after the amount, whatever he is receiving, he collect that amount and he transfer to Chennai. So even for the income tax department, it's very difficult to find a person who is shifting everything, all his asset, etc. How government will track that person? So it would be very difficult. So income tax thing, if somebody is transferring everything, whatever he has, then they can charge tax on those assets, the profit whatever he have earned in the same previous year. Because in the assessment year, maybe that would be very difficult for income tax department to find that person and collect the tax. So point number 4 is on the basis of facts. So if somebody is transferring due to any genuine reason, for any medical emergency or anything else, then it won't be happen. But if the intention of that person is to avoid tax, then the collection of tax would be in the same year. Now, how the intention we will find it out. So it will depend upon the case to case basis. So that is on the income tax officer. If they think the intention is to avoid tax, they will charge the tax in the same year. If they think no, the intention is genuine and he will pay tax in the next year, then this would not happen. Point number 5 is discontinued business. Of course, suppose you are running a partnership firm or you are a company and you dissolve your company, liquidate your company, wind up your company, or dissolve your or liquidate your partnership firm in the previous year. Suppose in December you wind up. Till December, the profit is suppose 50 lakh rupees of that company and partnership firm. Till December. And now company or partnership firm say we will pay the tax in the assessment year. So that would be a problem. If the business dissolve, the partnership firm dissolve, then in the next year, who will pay the tax? Partners will be go anywhere in our country, director, shareholder would be anywhere in our country. How government will find those and ask for collection? So if any business discontinue, then tax need to be paid in the same previous year. Diversions, or how can we justify that we are just diverting the income and not applying the income? Gaulti Anil. So I have just told you that it is on the basis of fact. But for timing, I can tell you, Mr. Anil, that if someone is selling only the property, is not purchasing anything, where do we live? If we transfer our land, building, etc., and not even we are purchasing any new building, not on even on rent, then that there could be an intention, there could be a mala-fide intention. But again, this is on the basis of fact and circumstances. Income tax department will see whether avoidance of tax involved or not. Meenu is saying sale bus, so income tax applicable as GST is exempted. What does that mean, Meenu? I'm not able to understand. Sell bus, what is this sell bus? Okay. Vishakha is saying, sir, if deemed assessee did not pay tax, then who will be liable? His asset would be liable. So if you want to be a deemed assessee, there would be a certain kind of net worth you should have. So a person who does not have any property or net worth, that cannot be a deemed assessee. So if he won't be going to pay the tax, then his property is going to be attached. Government will recover from his property, asset, etc. Like you could not be a deemed assessee. You are students. So if you want to be a deemed assessee of a non-resident shipping business, that okay, I will pay tax if he's not paying. So you cannot be a deemed assessee because you do not have that much net worth that if you are not paying, government can collect from your property. So to become a deemed assessee, you should have certain kind of net worth. Selling business, no income tax applicable as GST is exempt. What selling business? Meenu, I am still not understanding what exactly selling business is what. Sumit is saying government don't forget any tax. Yes, government does not forget anything. So those were the cases in which the previous year income is going to be taxed in the same year. Now the other case are like this. Achha, now Meenu is asking, I have sale my business, so income tax applicable. What is this? I have sale my business. You sell product, you sell goods, or you provide service. I have sale my business is what? And if the meaning is that, if you want to ask this, that you are a company and you have transferred your company to other shareholder, etc. In that case, the business does not discontinue. Someone else is running that business. So these provision would not be applicable. So these provision would be applicable if you discontinue the business. So the difference between discontinuance and sale is completely different. So if you sell your business and somebody else is carrying it, so these provision is not applicable. These would be applicable if it is liquidated, dissolved, or winding up. Okay. The sale of business will be taxable. Quality, the sale of business is not exactly the term. You sell your shares, etc. So if the profit arise, in that case, that is going to be taxed on sale of share, etc. That is going to be taxed in capital gain. Absolutely correct. Okay. Okay. So one new concept again we are going to discuss: undisclosed source of income. So generally, when we have gone through with the definition of previous year and earning year and the assessment year, suppose in 25-26, previous year, you have earned 50 lakh rupees. And you have explained in the assessment year, full 50 lakh rupees as your income of the previous year, 25-26. Miss Mac is saying, Monisha is saying, sir, what if I am in loss? If you are in loss, that could be set off from your income. So there is a separate chapter regarding it, set off of losses. Okay, Mac is asking, sir, these points of section we remember just knowledge purpose, sir. Sections, if you are able to write it down the correct section in examination, you will get good marks. And even if you're not able to write it down the correct section, still you will get the good marks, but that would be more impressive if you write down the sections. But let me tell you, for the purpose of income tax, provision of TDS provisions is when you will go through with the TDS provision, the sections are technically, you need to write it down. It's very important. For all of this provisions, if you are not able to remember the sections, that would be okay, not a problem. Khila is asking, sir, if in case I am assessee, I paid tax for 5 years and after 5 years my income is less than threshold limit, then also the person is called assessee? No. For every year, the status of an assessee would be different. So for 5 years you have income, you have paid tax, so you will be called a assessee for those 5 years. But in the 6th year, if you do not have income, in that case, if you do not fall in any other point also of an assessee, do not have income, your case has not been opened, etc. For so that 6th year, you will not be treated as an assessee. Gayatri is saying, sir, you had to discuss local authority and AJP. Okay, thanks for remembering me. We will discuss it after this point, definitely. So suppose you have earned 50 lakh rupees in 25-26 and you have disclosed this income in the next year that I have earned in the last year 50 lakh rupees. So technically the previous year of this 50 lakh rupees would be 25-26, and of course the earning year of this 50 lakh also would be 25-26. So if you disclosed your income to the income tax department, then the previous year and earning year would remain the same, because would be your previous year and exactly this is for earning year of this 50 lakh rupees. But take another example. If we change this example, suppose in previous year, 25-26, you have earned 50 lakh rupees. But in assessment year, 26-27, you have only disclosed 30 lakh rupees as your income of previous year 25-26. You just told to income tax department, in actual you have earned 50 lakh rupees, but you disclosed to the income tax department that I have only earned 30 lakh rupees in previous year 25-26. So income tax department does not know. They think, okay, you have earned 30 lakh rupees, so we accept the tax on 30 lakh rupees. They will do the investigation at their own. But technically, in this situation, you have paid tax only on 30 lakh rupees. Now, technically, as per income tax department, the previous year of this 30 lakh rupees would be 25-26. Because income tax department does not know about the 20 lakh rupees income, what you have escaped. Now suppose after 4 or 5 years, suppose in year 30-31, income tax comes to know that you have escaped your 20 lakh rupees income. You have escaped income of 20 lakh rupees. So they have find out this thing in year 30-31 from some information, from some document, etc., etc. So they find out this 20 lakh rupees in 30-31. Now what will happen? This 20 lakh previous year now would be 30-31, because the year in which department comes to know about your income would be called the previous year. So as you explained, 30 lakh rupees your income for previous year 25-26 yourself. So that would be the previous year for this 30 lakh rupees. But this 20 lakh rupees has been found out by the income tax department themselves. So the previous year would be the year in which they will come to know about this income. So for this 20 lakh rupees, the previous year would be 30-31. Now my question for all of you is this. What would be the earning year of this 20 lakh rupees? If the previous year for these 20 lakh rupees 30-31, what would be the earning year for this 20 lakh rupees? Sumit is saying 30-31, 31-32, 30-31. No, the earning year will remain same, because earning year was 25-26. It will not change, but previous year will change. So previous year will be the year in which either you explain to the department this income belongs to which year, or the department find out themselves. So that would be the previous year for department, but the earning year would remain 25-26. Why I am telling you this? Because now we have this concept. For the income, you disclosed yourself. For the income, you disclosed yourself to the income tax department. The previous year and earning year will remain the same. Like in example number 1, you have earned 50 lakh rupees in 25-26. You have explained to department. So you can see the previous year and earning year will remain the same for this 50 lakh rupees. But if you escaped any income, if you did not disclose any income, if you avoid any income to be taxed, that we call black money. So in case of black money, the previous year and earning year will not be same. In that case, previous year would be the year in which department will come to know about that income, but earning year will remain the same, the year in which you earned that income. So this is the exception we are going to discuss. The exception is for this rule. General rule was this, that previous year and earning years are same, but now we are going to discuss the exception of this rule. There are some cases, in case of black money, the previous year and earning year would be changed. So for 20 lakh, only previous year will be, yes, 30-31, correct. And there is no concept of assessment year also in case of black money. There's only previous year, and the same year department will recover the tax with penalty, etc. But the earning year would be always changed. In case of black money, the previous year and earning year would be always different. Methali is asking, but how the department find this is pertaining to earned in which? The assessee will explain. How department will come to know, we will discuss it. We have example of it. Do not worry about it, students. We have example. So undisclosed source of income, we are having 6 separate cases. And now you can see previous year for unexplained cash credit investment. So the concept what we are discussing, what would be the previous year in case of escaped income, unexplained cash credit, the year in which the department will comes to know. So cases where earning year and previous year is different. So in case of white money, the previous year earning year would be always same. In case of black money, or in these 6 cases, the previous year earning year will always be different. Again, in these, out of these 6 cases, the 5 cases are similar. Department find out your unexplained money, unexplained investment, etc. Unexplained money, unexplained investment means the income which cannot be explained by you, that from where you have earned it. So that would be treated as your black money. Cash credit under section 68. So where any sum is found credited in the books of an assessee maintained for any previous year, and assessee has no explanation about the nature and source thereof, or the explanation offered by him is not in the opinion of the AO is satisfactory, then such sum may be charged to income tax as the income of the assessee of the previous year. Suppose if any cash entry found in any register book, etc., with the assessee, and if assessee was not able to explain that, it can be treated as black money. Now, it's a very interesting thing. Generally, we think that if money has been received, income tax department found actual cash, 50 lakh rupees, suppose, in your house, and you cannot explain it, that 50 lakh would be your black money. Clear? But we are not discussing that situation in point number 1. The situation is saying, suppose there is any entry in your books of accounts. There's a books of account in any register. You have write it down that in that particular year, you have received 20 lakh rupees from someone. Department find out that entry, just an entry in your books of accounts. And on that 20 lakh rupees, you have not paid tax. You have not shown that 20 lakh rupees value in your income tax return. So that 20 lakh rupees only entry could be treated as your income. We are not finding out any actual cash. So even if there are entry in your books of accounts which has not been included in your income tax return and you cannot explain why it is, even in that situation, that 20 lakh, 30 lakh, 40 lakh would be treated as your income. So the notes I believe you must have downloaded from the portal. In the end of those notes, I have explained with the help of example also. So kindly, with the help of it, I have prepared a diagram also for these provisions, and there are example also written over there. So you can go through with that example also. But you can understand cash credit. That means even if there are entries in the books of accounts which cannot be explained and which has not been included in the income you have shown to the income tax department, that could be treated as your black money. Suppose a 20 lakh rupees entry has been there and it has been written on 20th of October 2025. Okay? Our department has found your register in 31-32 year. In 31-32 year, department comes to your house and found this entry. So the earning year, because the date has been written, would be treated as this year. But the previous year would be this year. Understood? So that's how we find out the earning year in this case, and the previous year would be different. Galti Anil is saying, so can the statutory auditor or tax auditor intimate to AO? Look, what can be intimated by whom? That is a practical thing, but that cannot be discussed in our class. Point number 2. Unexplained investment. Now, in the first point, there was unexplained entry. Now there is unexplained investment. So assessee has made investment which are not recorded in the books of accounts. Now suppose assessee has purchased a property, a building of suppose 2 crore rupees, and the date, the registry copy. The registry has been done on 10th October 25. The balance sheet is submitted for this year to the income tax department. There is no property detail has been submitted in this year. Fine. Now in 31-32, suppose department raid on his house and find out this registry. Now the date has been mentioned that 2 crore rupees registry has been done on 10th October 25, which has not been shown to the income tax department. So department will assume that this property must have been purchased from the black money. That's why it has not been shown in the balance sheet or to the income tax department in return. Now the registry date is here. So that means the previous year for this 2 crore would be 25-26. Sorry, the earning year. And the previous year would be 31-32. So if there is any unexplained investment which has not been shown to the income tax department, as point number 1, is there any entry which has not been shown to the income tax department? Same case. Unexplained investment not disclosed to the income tax department, same thing. Yes, Miss Mac, absolutely right. If previous year earning year is different, then it called black money, but I believe the sentence should be reversed. In case of black money, the previous year and earning year would be different. That would be the correct sentence. You have just revised the sentence. So point number 2 is exactly the same. Third point, now in first point there was entry but not the money. But in third point, now there's money but not the entry. So if money has been found at your premises, office, etc., which has not been in your books of accounts, so that would be, of course, a case of black money. Same point number 4. Point number 2 was unexplained investment. Now the investment value is low. The property has been purchased for 2 crores, but shows in the books of account only for 30 lakh rupees. Department comes to know later that value was 2 crore. So difference 1 crore 70 lakh would be treated as your black money. With example, you can understand that. Unexplained expenditure. Again, this is also very interesting. till now we have seen that if there is any income, etc., which cannot be explained, that could be your black money. But even if you have done any expenditure which does not match with your income, that could be also be treated as your black money. Suppose somebody income, as he has shown in the books of accounts, 10 lakh rupees per annum. Somebody is doing business and he has shown that in last 5 years, he has shown to the income tax department this much income he has earned. So technically 63 lakh rupees income he has earned. So if he has done any expenditure, suppose he purchased a house for 100 lakh rupees. So as per income tax department information, he must have income of 63 lakh rupees. And out of this 63 lakh rupees, he must have expended on his personal expenditure also. So this is 63 lakh rupees before his personal expenditure. So department will assume that out of this 63 lakh rupees, after deducting the drawings in personal expenditure, maybe he is having 40 lakh rupees in his hand or certain amount like that. So technically he must have capital of 40 lakh rupees, but suppose if he invest and purchase a property of 100 lakh rupees. So this 100 lakh rupees expenditure does not match with his capital or income. So that can raise a doubt in the income tax department mind. And they can ask you that we believe that you have capital of 40 lakh or 50 lakh rupees. How you expenditure is more than that amount. So either though he is going to explain that I have taken the loan of 60 lakh rupees, 40 lakh was my capital, 60 lakh was my loan. So he will show the documents of loan, etc. So that could be not a problem. But if he won't be able to explain that how he has done that much expenditure, which does not match with his income, in that situation, the difference could be treated as your black money. So that is also a case. Okay, so Golti is asking, sir, what if the investment is made out of profits of the business and he has not filed his individual return of income tax, sir? Sir, in that case, balance sheet will not tally. Look, these are very subjective cases. Like point number 1, 2, 3, 4, 5, 6, whatever we are discussing. When these kind of circumstances happen, a lot of explanation must have been given by the department to the assessee and vice versa. So if he is going to prove it, that due to some genuine reason he did not file his income tax return due to medical emergency or any other thing, and if government understand this thing in any case, that you have not escaped any tax, you have not avoided any tax, you have not evaded any tax, this has been proved that there is no tax evasion involved, then of course they will understand, they will not charge or not call this is a black money. So whatever we are discussing, these are very small topics at your level, but actually when it actually happens, then these are huge cases and there are multiple fact of the cases, and if at the end of the case it has been proved by assessee that there is no evasion of tax, then of course these provision would not applicable. Okay. Now point number 1, 2, 3, 4, 5, if you see, these are similar. Point number 6 is different, and this is amount borrowed or repaid on Hundi. So Hundi is a kind of a negotiable instrument in a vernacular language, which would be work in a regional level, or we can say not even a regional level, on a local level. And we can say not on a local level or in a market level actually. So what is Hundi? We call it Hundi, Parchi, locals, BR, BP, we can discuss it. Why Hundi concept is over here? Let me explain you, and after that we will discuss the local authority and artificial judicial person definition. So what is exactly Hundi? So it is a multiple name in different cities, in different markets. Someone called it Parchi, someone called it Hundi, someone called it anything else. Okay. Let me give you an example what exactly is happening in this Hundi case and why it has been included as undisclosed income. Suppose this is a market of any city. It's a shoe market. These are generally unorganized. There is a buyer and here's a seller. I guess you must have gone through the negotiable instrument. You understand the meaning of bills receivable, bills payable, etc. So the same concept is here, but these are local bill payable and bill receivable. Maitri is asking, these undisclosed income is important to exam point of view. Look, this is the attitude we have to change, Maithili, in our intermediate and final level. Everything is important. Everything. In the examination, they can ask each and everything. So if you, as I discussed in the starting of the class, when we say study, there were 4S: study, then sincerity, then sacrifice, and then strategy. So when we call it study, means comprehensive study. You cannot go for selected study. Everything is important. So I recommend you, please read each and everything. Yeah, like a promissory note, you can say, but it's a local promissory note. So a buyer and a seller, suppose seller sales 20 lakh rupees goods to Mr. B. So B is the buyer, S is the seller. Now, buyer promise him to pay that I will pay this money after 3 months. But seller might going to need these money right now. So buyer write it down a Hundi and he write it down, I, Mr. B, promise to pay to Mr. S or the bearer of the instrument 20 lakh rupees after 3 months. Certain kind of language. And he will sign it. Right? Now, Mr. Seller having two options. Either he will hold this Hundi for 3 months and after 3 months he will take the money from Mr. B. Or he can, so even he can hold, or he can go to a person who works like a bank in this market. Like a bank. Like a money lender. So generally what we do, we discount our BR from a bank. We can do that in a normal BR. But because these are local markets, so there would be a person who could be a money lender, who is a powerful person having high net worth, etc. So now Mr. S can go to this money lender and ask him to discount the Hundi of Mr. B and take the money. So out of this 20 lakh, this money lender pays to Mr. S, suppose 19 lakh rupees to Mr. S. Clear? After 3 months, this money lender will present this Hundi to Mr. B and Mr. B will pay 20 lakh to this money lender. So 1 lakh rupees is the profit of to the money lender. Mr. S got the money instantly. Mr. B got the credit of 3 months. And after this 20 lakh rupees payment by Mr. B, this Hundi, Parchi, whatever we call it, this has been destroyed. So government will not able to know who is paying that much, and these all transactions is going to be happen in cash only. Fine, these all transactions are going to be in cash. And of course, these cash is the black money, whatever earned by Mr. Money Lender, and who purchased the goods, who purchased these goods from whom, who is paying the amount, who is recovering it. So there is no track available. There is no trail available. You cannot check it because the ultimate document, which is Hundi, has been destroyed at the end of this transaction. So nobody will able to find it out who purchased goods from whom in this market, who pays the money, who earn the discounted income, because everything is going to be done in cash. Hundi is legal if the amount has been taken or repaying via account pay check. Okay, Ariba. So the provision section what we are discussing, it says that if any Hundi and the transaction has been done in cash, if the transaction has been done in cash, then the person borrowing or repaying that amount is going to be treated as black money. So what government just wanted to do, They say on Hundi you can do a transaction, but the transaction should be done by account pay check via bank. So we will be able to know who is paying, who is receiving, who is earning discount income, etc. So we can regulate it and we can collect the tax on it. So on Hundi, the transactions are allowed. But if it is on cash, then the person who is borrowing that money, that means technically S, and the person who is repaying the money, that means B, the amount will be treated as their black money and they need to pay tax on that amount. Okay. So out of these 6 points, if you will see, 5s are similar, but 6 is different. So you can go through with this point number 6. Now on these black money, the tax rate is very high. The tax rate is 78%. Normally the tax rate are having slab rate 5%, 10%, 15%, 20% like this, and the maximum tax rate is 30%. But if your money has been fall in out of any of the 6 points we have gone through, or if it has been treated as your black money, the rate of tax is 78%. And how it is 78%? The rate of tax is 60%. The income tax rate is 60%. Then 25% surcharge on it. Surcharge on 60% with the rate of 25%. So 25% of 60% we have to calculate, that would be 15%. So total is 75%. On this surcharge, 4% cess is applicable. 4% of 75%. So that would be 3%. So total rate is 78% need to be paid on this black money. And this is only tax. Penalty interest, that will be depend upon case to case basis. Now point number 2, no deduction, exemption in respect of any expenditure allowance. So if any income has been treated as your black money, out of that income, you cannot claim any kind of expenditure, deduction, etc. that is going to be taxed as gross basis. Gross basis. No benefit, no expenditure, no deduction you can claim. So that was black money cases. Now the definition of local authority and artificial judicial person. Let's discuss that. Very simple definition. Now what is local authority? So government, those department, those work on central level. That is called central government, like army, defense, etc. Government, those department, those work on state level. That is called state government, like police, etc. And government, those department, those work on local level. That is called local authority. So it's a very simple definition. The government department, those work on local level are called local authorities. Artificial judicial person definition is just like that. Any person who does not fall in the above category from 1 to 7 category, individual, HUF, AOP, BOI, partnership firm, company, local authorities. So if any person who does not fall in these above category, that is going to be treated as artificial judicial person. It includes God, even our institute, ICAI, etc. That is also part of artificial judicial person. Arun wants to ask something. Yes, Arun. Yes, Arun.
Sir, actually, I have a doubt. Okay, previously we discussed about the concept like undi like that. Sir, okay, is there any limit? Means okay, above this transaction done cash, then only it's going to applicable. Otherwise, there is no limit. Even 1,500 is going to apply.
There is no limit. If transaction in cash, there is no limit. The amount which would be transact in cash other than account pay check, that is going to be treated as your black money.
Sir, in case you know that okay, under the salary aid, there is a concept. Okay, medicine expenses. If okay, they given up to loan employer employee to 15,000 something Okay, 30,000 or something, sir. I don't know that. Okay, up to that, okay, there is no requirement. Even if whatever the purpose is taken, they're going to exemption. If that time they taken a loan as in a cash in hand, that time also it's going to attract.
No. If there is a provision in which cash has been allowed by the income tax department, so that would be a case in which exemption is allowed. Like we have medical insurance premium deduction in which 5,000 cash is allowed for your preventive health checkup. In salary also there are certain cases in which cash amount is allowed. So if the law allowed somewhere the transaction of cash, that is allowed. In case of even business also, up to 10,000 cash is allowed. But in case of Hundi, there is no cash limit has been prescribed. So that means even if it's for 5,000 rupees, 500 rupees, 100 rupees, and if it has been found out by the department, technically that is going to be your black money. We don't have any exemption limit in case of Hundi. Okay, Mr. Arun? Galtian is asking, sir, surcharge and cess has to be taxed on tax, right, sir, every time? Yes, of course. We will discuss the surcharge and cess provision. In black money, it's always going to be taxed. But in case of white money, the surcharge and cess provisions are different. That is going to be discussed in rates of taxes. Akhila is saying refund also is not being claimed on undisclosed refund. You need to pay the penalty, interest refund. Just forget about it. No refund, etc. Sure. Next, moving on to the provisions. Now, concept and definition of income. Because we are discussing Income Tax Act, until now we did not understand the definition of income. We did not discuss the definition of income. Now, concept of income says income word cover receipt in the shape of money or money's worth. So, income could be monetary or non-monetary, which arise with certain regularity or expected regularity from a definite source of income. So, technically, there is three main ingredients to become an income. Whether it's monetary, non-monetary, there should be some regularity or expected regularity. Like you are doing job. So monthly you can expect that income is going to be received. And the source should be definite. And of course, the salary is going to be received from which source the employer is going to pay you. Same case if you are doing a business. In that case, there is a regularity because you will sell on frequent basis, you will get the money. So if you understand these 3 points, this says income tax says that the income definition covers there is money with regularity and definite source. So if there is not regularity or if the source is not definite, so it would not cover in the definition of income. The answer is no. That has been covered over here. So if you think, technically we can say there are two parts of income. Under income tax, even any receipt which arise not from any definite source and not regular is treated under the definition of income as capital receipt. So whether it's definite source, regularity, it's income. Whether it's not definite source, not regularity, still it would be treated as income as capital receipt. So we can say this is called as revenue receipt. And these are called as capital receipt. Both are taxable. Like if you transfer your property, if you transfer your building, so that is not a regular work. You do not transfer your building regularly, but still it's going to be taxed as capital gain income. In the same way, if you won a lottery ticket, so that is not a regular thing, so that is going to be your income as a capital receipt. Sure. Now, characteristics of income, general thing, we have discussed what is the meaning of regular receipt vis-a-vis capital receipt. You can go through it yourself, reading work. Revenue receipt versus capital receipt. Net receipt versus gross receipt. So net receipt versus gross receipt means that income is going to be taxed after expenses. So if you are running a business, your sale is not going to be taxed under income tax act. Sale after expenses is going to be taxed your income tax act. But in case of black money, the gross is going to be taxed. But in case of white money, the net receipt is going to be taxed after deducting of allowable expenditure, etc., which has been allowed by the income tax department. Due basis versus receipt basis. So income could be taxed on due basis as well as on receipt basis. We have 5 heads of income: salary, house property, PGBP, capital gain, and income from other source. So in case of salary, house property, and capital gain, the income is going to be taxed on due or receipt, whichever is earlier. So you will understand this concept when we will discuss these provision, these chapter in detail. But for the time being, I am telling you in case of salary, house property, and capital gain, the income is going to be taxed on due or receipt wages, whichever is earlier. In case of PGBP and income from other source, you have choice. Either you can tax it on due basis or you can tax it on receipt basis as you want. Okay. So when we will go through with this chapter, you will understand what this due or receipt basis and how it works for the purpose of taxability. Sumit is saying due whichever is higher or earlier is same. Yes, due or higher you can understand in the meaning of amount wise, or as a concept wise you can understand it's the earlier. Higher, earlier is same. Now application of income versus diversion of income. So application of income means to discharge an obligation which is gratuitous or self-imposed after such income reaches the assessee, whereby virtue of an obligation by overriding title, income is diverted before it reaches the assessee. It is known as diversion of income. In case of the former, the income would be taxable in the hands of the person who applies it, whereas in the case of later, it is not taxable. Even if the assessee were to collect the income, he does so on the behalf of the person to whom it is payable. So once you have earned any income, or received any income, and after that you utilize that income anywhere, that's called application of income. Suppose you are earning salary of 10 lakh rupees per month from any organization, and you decided to donate 1 lakh rupees to any charitable organization. So you asked your employer that whatever amount of salary I have earned in every month, out of that salary, please transfer 1 lakh rupees to the charitable organization directly. But technically, you have earned your income. Even if they will transfer that amount directly to the charitable organization, still the income would be treated as your income. Your salary will be considered as 10 lakh rupees in your hand. Even if 1 lakh is not received by you, but it is technically earned by you. So whatever amount you are transferring, or maybe you are applying a auto pay in your bank account, that automatically 1 lakh rupees is transferring to the charitable organization as soon as your salary credit into your bank account. Still, it will be treated as the application of income, and in that situation, your salary is going to be taxed full 10 lakh rupees. But in case of diversion of income, it is not so. Suppose there is a partnership firm. Golti is asking, so the concept of Hundi, even one small transaction in cash, I treated as black money, right? Which is different from exemption allowed by Income Tax Act. Even it is paid through cash to some extent is different. Yes, exactly. In case of Hundi, there is no benefit of any limit. Whatever amount will fall in that category, that is going to be taxed as your black money. Okay. Let me give you an example of this diversion of income. Suppose there is a partnership firm in which father and S1 and D1, son and daughter, these three are partner, equal partner. Fine. And it has been, the father has been make a legal deed that after the death of Mr. F, 20% profit share in the partnership deed, it has been written, then after the death of Mr. F, 20% of the profit is going to be transferred to his wife. That means mother of S1 and D1. So in this partnership firm agreement, it has been already written. Then after the death of Mr. F, whatever is the profit, the 20% needs to be paid to his wife. Now in this situation, if Mr. F died and this partnership firm runs, then whatever amount, suppose this partnership firm earns 10 lakh rupees as a net profit. Out of this 10 lakh rupees, automatically 20% would be the income of his wife, Mrs. W. That means 2 lakh rupees. So now this 2 lakh would be treated as diversion of income in the hands of partnership firm. So technically now partnership firm will pay tax on 8 lakh rupees because that is a legal obligation which is mandatory to run this business. If they will not transfer this income, this partnership firm will dissolve because it has been already written in the partnership deed. So this is called diversion of income. So 2 lakh would be the income in the hands of Mrs. W, but the partnership firm income would be treated only as 8 lakh rupees. Sumit is asking, this will be happen every year. Yes, of course, every year, the 20% part of the income would be automatically treated as diversion of income. So the balance would be treated as partnership firm income. Back to the provision. Now, concept of revenue and capital receipt, these will be discussed in detail under different heads of income like PGBP, capital gain, income from other sources. Now, the definition of income, this is very, very interesting because we do not need to understand that because every point, whatever is given in this definition is going to be the part of other heads of income. So it says income include everything. The definition of income in section 224 says profit and gain, dividend, the value of perquisite, special allowance, etc. So all these points are going to be discussed in the heads of income, what we are going to discuss later. We cannot understand the provision over here because if we will discuss the provision of perquisite, so I need to make you understand the meaning of perquisite. So that would be discussed in salary chapter. So that's why these are just for reading purpose. Just read it out and you would be able to understand each and every point when we will discuss one by one the other chapter of the subject. So that was the theoretical part of, or you can say the part one of our basic concept chapter. I always say this to all the students, revise twice. That's my advice to make you wise. So if you want to learn the provision nicely, please at least revise your concept twice. If you revise them twice, your provision would be really, really strong. And that would be easy, that you will understand the concept easily. So that was part one. Now we are moving to part two. Rates of tax. So these are going to be numerical topic. Muruthunjaya is asking, in diversion, tax will be on 10 lakh or 8 lakh. In case of diversion, partnership firm will pay tax on 8 lakh rupees. 2 lakh would be treated as Mrs. W income. Okay. Maithili, rhyming word, yes. That's why you would be able to learn them because that's rhyming. Okay. Chalo. Now the rates of tax. So this is going to be interesting and of course numerical part. And after discussing the rates of tax provision, you would be able to calculate the tax on incomes. Whatever general income you will, if somebody is earning salary, income, etc. After this topic, you would be able to calculate tax on those person income. Except some special incomes like capital gain, etc. Those rates are different, but general income like business income, salary income, interest income, house property income, you would be able to calculate the tax on these income. So some are destined to succeed and some are determined to succeed. So rates of tax, surcharge, cess. So under Income Tax Act, for the calculation of tax, there are four concepts we should understand. The tax as per rates, then the concept of rebate. Rebate is a discount which you can have from your tax. Then surcharge. For the calculation of final tax liability, you have to do these four tasks. You have to calculate tax as per rates. Then rebate, if applicable, it will be subtract from your tax. And if surcharge is applicable, that is going to be add back. After these treatment, the cess needs to be charged at the rate of 4%. After the cess, this would be your final tax liability. So to calculate the tax, we need to understand, first of all, the rates as per the individual HUF category, the person-wise rate structures, then the rebate concept, then the surcharge concept, and then the cess concept. Sumit is asking, cess is fixed 4%. That's why I have written it 4% because rates are different, rebate provisions are different, and of course the surcharge provisions are also different as per the categories. But the cess is fixed 4% in every case, universal. So now moving on to the rate concept. So under income tax, we have two regime, two system, two option you can say. One is default tax regime and one is optional tax regime. The default tax regime and optional tax regime. Under default tax regime, there are three categories. If you are an individual, you must have remembered that we have gone through the definition of person, in which there was individual, HUF, AOP, BOI, partnership firm, LLP, company, local authority, and AJP. So person-wise rates are different. So we are discussing rates as per person-wise. So in the question, we have to find out which person is this. As I've told you in the first class, if there is a client comes to us, then first of all, we have to ask, what is your constitution? Whether you are an individual, HUF, AOP, BOI. Why? Because the rates of tax and the provision could be different as per the person category. So that's why, because the rates has been different, we have to know what category person we are dealing to find out the correct tax liability. So if the person is an individual, who is R means resident, individual resident, and if his age is 80 years or more. So if there is a person in the question, if that is an individual who is resident in India, and if the age is 80 year or more, that is called super senior citizen. We are discussing the concept of rate of tax under optional scheme first. We will discuss the default tax scheme later. First of all, we are discussing optional tax scheme. So suppose there is an individual who is resident in India, age is 80 year or more. he will be called super senior citizen. So for those category of individual, up to 5 lakh rupees is exempt. So if you are a super senior citizen, you need not to pay tax up to 5 lakh rupees of income. This is your basic exemption limit. We called it basic exemption limit. So any one of you fall in this category? Of course not. So you should be a resident and age must be more than equal to 80 years. Then you need not to pay any tax up to 5 lakh rupees. The second category, if you are an individual resident, but age is more than or equal to 60 year, but less than 80 year, because it is 80 year, then you would be in first category. So those individual, those are resident and age is 60 to 80 year. Those are called senior citizen. So these are super senior citizen and these are senior citizen. So for those, the benefit is up to 3 lakh rupees. So the basic exemption limit is 3 lakh rupees for these category of person. So do any of you or me fall in this category? I believe no. Now the C category is for all other individual. All other individual, those does not fall in category A or B. All other individual will fall in this category, whether resident, non-resident. That means all non-resident. If you are a non-resident, whether age is more than 80 year, less than 80 year, you will fall in category number C. And if you are a resident, those age is less than 60 year will fall in this category. Non-resident age does not matter. Whether 80 year, 60 year does not matter at all. So if you are a resident, or either you can learn it in this way, if you does not fall in category A or B, all other individual will fall in category number C. And with individual, all HUF, AOP, BOI, AJP also fall in this category. So C category is larger category. It covers all other individual except A and B case. Matlab, that means we can say except senior citizen and super senior citizen. All individual in this category. Whether resident, non-resident does not matter. And all HUF, AOP, BOI, AJP, resident, non-resident, those fall in this category and those having 2.5 lakh rupees basic exemption limit. So we all does fall in this category. So we have exemption limit of 2.5 lakh rupees. We do not need to pay any tax if our income is up to 2.5 lakh rupees. Understood? Now, how to calculate tax in this case, that we will discuss after a short break, of course. So, Mr. Sanket, can we have a short break? संकेत जी हैं यहाँ पर, कॉल करते हैं. we resume? Welcome back, everyone. So I believe you must have your tea, coffee, water, etc. So going back with the provision, as we were discussing the concept of rates of tax, and we have seen that in case of optional scheme, there are three categories. If you are an individual, resident, super senior citizen, the basic exemption limit is 5 lakh. If you are a senior citizen, the basic exemption limit is 3 lakh. And if you are other individual or HUF, BOI, AJP, AOP, then the limit is 2.5 lakh rupees. Now, how the rate would be applicable? So I will explain you this with the help of a very simple trick. Suppose there is an income train. You are in an income train, and this income train having two cases, that if income is up to 5 lakh rupees, the first platform, you can say the first platform is up to income 5 lakh rupees. So if the income is up to 5 lakh rupees, then the rate of tax would be 5%. This is our first platform. So if in A, B or C category, if income is up to 5 lakh rupees, then the rate of tax would be 5% is going to be charged. The next stoppage, the second is for next 5 lakh rupees. That means total income is up to 10 lakh rupees. So if any income fall in this category in next 5 lakh rupees and up to 5 lakh rupees, the rate of tax would be 5%. But if any income which is exceeding 5 lakh up to 10 lakh rupees, that means the next 5 lakh rupees is going to be taxed at the rate of 20%. And if any income exceeding this platform, that means income exceeding 10 lakh rupees part, any income which is exceeding 10 lakh rupees part, that is going to be taxed at the rate of 30%. So you just need to remember two things. The basic exemption limit for different category of individual, 5 lakh rupees, 3 lakh rupees and 2.5 lakh rupees. And the second thing you need to learn is that the rate as per this income platform. If income does fall up to 5 lakh rupees, the rate would be 5%. For the next 5 lakh rupees, the rate would be 20%. And the balance is going to be taxed at 30%. So if you learn these two things, now this would work like a machine. The income, if you put in this machine, you will get the correct tax automatically. Let me show you how. Suppose as per example, suppose there is Mr. A, age is 85 year, non-resident, and his total income has been given in question, suppose 9 lakh rupees. First of all, you need to tell me in which category Mr. A will fall. What would be the basic exemption limit for Mr. A in this example? Sridhar is saying, sir, but now tax rate is applied as per income earned, not the age criteria. What does that mean? Quality Anil is asking, sir, I'm sorry if I am wrong, but is there any back-end reason, logic behind these limit? Like any inquiry or survey result made department before quoting these limit? Yes, of course, there are reason behind these basic exemption limit and rate of tax, etc. But that is very deep region. Like you have to understand this is not the part of syllabus, but that is very different and very, very deep reason that government estimate the expenditure of our country, first of all. And for those expenditure, how they will earn income from different sources. That like how much they will collect from GST, how much they will collect from other source of revenue. Then they will see how much we need to collect from income tax department and how much income tax collection, what should be the rate for company, etc. So that's a very, very, very deep and very complex kind of thing to calculate that this much amount of income tax should be collected to run our country. So it's a reverse based calculation and it needs to be very, very complex situations to understand the concept of these rates, limit, etc. Monisha sir, can you please mention the page number of the study material of this concept? Go through your study material, you will find it out. Okay, so Meenu Kumari is saying super senior 5 lakh. Harshpreet is saying 5 lakh. Gaurav is saying 5 lakh. Miss Mac is saying category A. Visual is saying 2.5. Amit is saying C. Gayatri is saying 2.5. Nidhi Rathore is saying 2.5. Surinder is saying super senior citizen. Visual is 5. Ariba is saying 5. Akhila is saying 2.5. Maithili is 5 lakh. Dhanlakshmi is saying 2.5. Karan is saying 2.5. Sumit is saying 2.5. Dhanlakshmi saying, Sushmita is saying 2.5. Kashish is 2.5. So those saying 5 lakh is wrong because I have written it, it's a non-resident. You have to be very careful to find it out which category we are discussing. We have discussed that in A category, the person should be resident. I have told you, you can see that for all non-resident, the category would be C. The resident should be there for categorized as super senior citizen. Mrityunjay is saying 4 lakh. Where is the limit of 4 lakh, Mrityunjay? What are you saying? It's 5, 3 and 2.5. Where is this 4 lakh has come? So because in example 1 is a non-resident, so he would fall in the C category. That means the basic exemption limit would be 2.5 lakh. Now up to rupees 5 lakh, the basic exemption limit is 2.5. So how much is going to be taxed up to rupees 5 lakh? If out of 5 lakh, 2.5 lakh is exempt, the balance taxable value is 2.5 lakh and the rate would be at the rate of 5%. That means 12,500 rupees. Understood? Up to 5 lakh if income falls, the rate would be 5%. Now up to 5 lakh, 2.5 lakh has been exempted as a basic exemption limit. So taxable income would be 2.5 lakh, the balance amount up to this 5 lakh. So that's 2.5 lakh is going to be taxed at the rate of 5%. That would be 12,500 rupees. Is it clear till now? Now out of 9 lakh, up to 5 lakh calculation we have done. Now the balance is left 4 lakh rupees. Because up to 9 lakh rupees, 5 lakh has been calculated till platform number 1, the balance remaining 4 lakh and the rate of tax would be now 20%. So tax would be 80,000. Now 80,000 and this 12,500 rupees. So this would be 92,500 rupees. So that is the tax. So the basic idea is to firstly find it out which category of person you are calculating tax. Now example number 2 and I expect the correct answer in this case. Now suppose Mr. B age 65 year resident. Total income is 12 lakh rupees. Now can you tell me what would be the basic exemption limit in this case? Yes, absolutely correct. It would be 3 lakh. Everybody is giving the correct answer now because he is a resident. Age is between 60 and 80. So the category B would be applicable and the basic exemption limit 3 lakh would be applicable in this case. Very correct. Now we need to calculate the tax in this situation. And if you will see, out of this 5 lakh rupees, in this case, basic exemption limit is 3 lakh. So how much left? The balance is 2 lakh rupees left and it is going to be taxed at the rate of 5%. So that is going to be 10,000. Now out of 12 lakh, 5 lakh treatment has been done. Now balance 5 lakh rupees is going to be taxed at the rate of 20%. So tax would be 1 lakh. Up to 10 lakh treatment has been done. Now the balance left, because the income was 12 lakh rupees, first 5 lakh has been treated, next 5 lakh has been treated. How much is the balance left? The balance is 2 lakh rupees on which the rate would be 30%. So tax would be 60,000. If you add all these three, your tax would be 1,70,000. I hope it's clear till now. Okay, I'll give you some illustration for today in the notes also and from your study material also. When you practice, you will see this is very, very easy. You just need to find out the correct basic exemption limit and this money train, this income train, that up to 5 lakh, the rate would be 5%. Next 5 lakh, it's 20%, balance is 30%. It is as simple as that. And if you will go through with the notes, you will see, you might feel it's difficult. So this is optional tax regime and the concept we have discussed. Galti Anil, sir, could you please tell me whether it's 60 year equal to or more or just more than? It's equal to or more. It has been written in the notes. You can go through it. It has been written in detail also over here. So whatever we have gone through with the chart, now this is as per theoretical provision. If you need to understand the rate structure, etc., it is over here. In case of any other individual, that means this is our C category, this is our B category, and this is our A category. For super senior citizen, up to 5 lakh is free. So there is no tax liability at the rate of 5% because for super senior citizen, up to 5 lakh, there is no tax. Next 5 lakh 20% and balance is 30%. Normal case up to 250 nil. Next 250 5%. Next 5 lakh 20%. Balance is 30%. So whatever this table is going to make you understand, we have understood that with the help of that chart as we have discussed. But these are not only the rate, these are the normal rates. We have a special rate of tax also. So these rates applicable in case of salary income, business income, interest income, house property income. But there are certain incomes for which there are special rate of taxes applicable. In case of capital gain, the rate is on the basis of income, 12.5%, 20%. In case of casual income, it's 30% also. So those kind of rates is going to be discussed in respective chapters. But these are the general rates, mostly 70-80% rates or tax calculation is on these basis. In respect of certain types of income, as mentioned below, the Income Tax Act 1961 has prescribed a specific rate. The special rate of tax have to be applied on the respective components of total income, irrespective of the tax regime, and the slab rate have to be applied on the balance of total income after adjusting the basic exemption limit. So these special rates of income in capital gain, etc. So we will discuss those special rate of income in those chapters. For the time being, you need to calculate tax in basic concept chapter on this basis. This clarification, please go through. This is important for your examination. This is for your reading purpose. Your homework, we can say. Now there is a rebate. And the rebate under section 87A. The rebate is 12,500 rupees or amount of tax, whichever is lower. So in case of optional tax regime, in case of optional tax regime, if your total income is up to 5 lakh rupees. So rebate is a kind of a discount. So whatever would be your tax, that tax amount or 12,500 rupees, whichever lower, you can claim a rebate out of it. And this is only applicable for individual, those are resident under optional tax regime. HUF, AOP, BOI, AJP cannot take the benefit of this rebate. Even non-resident individual cannot take the benefit of this rebate. So let me give you an example. Okay, we have multiple example below. Calculation of tax format, as we have discussed, you have to calculate tax as per rates, then rebate apply if applicable, because rebate would be applicable only if income is up to rupees 5 lakh. Then you have to apply the surcharge. If surcharge is applicable, you have to add back surcharge. On this total, you have to apply cess 4% in all cases. This would be your final tax. This needs to be round off in multiple of 10 rupees. Now there are multiple questions, solved question. Like for example, individual less than 60-year resident. Let me tell you, if the question is silent, always consider it's a C case. Always. If age, etc. not given, treat him like a C case. That means up to 2.5 lakh rupees exemption case. Now suppose 2,60,000 income has been given, and that's a C case. Up to 260, 2.5 lakh would be exempt. On 10,000, the rate would be 5%. So tax would be 5%. That means 500 rupees. Now rebate would be applicable. And that would be the amount of tax. Rebate is not fixed 12,500. It would be amount of tax or 12,500, whichever is lower. So in this case, 500 would be the rebate and tax liability would be nil. Suppose income is 269,500. So tax would be 975 or 12,500, whichever is lower is your rebate. And this rebate would work only up to rupees 5 lakh. You can see the example number 4. As we have discussed now, up to 5 lakh, there is no tax. So exemption limit is 2.5 lakh, but with the help of rebate, up to 5 lakh, you need not to pay any tax. As you can see, if my income is 5 lakh rupees in C category, the tax would be 12,500. And in this case, the tax or 12,500, whichever is lower. So the same thing would be there. The rebate would be 12,500 and the tax would be nil. If your income exceeded 5 lakh rupees, there would not be any rebate, like in example number 5. 6 lakh rupees, the tax would be 32,500. And as income exceeding 5 lakh, there would not be any rebate. Surcharge would not be applicable because it applicable when income exceeding 50 lakh rupees, that we will discuss in surcharge provision. Cess would be applicable 4%. And after that, total tax would be this. Other example, in case of senior citizen, rebate would be applicable before calculating cess. In case of super senior citizen, rebate will not be applicable in any case. Why? Because in case of super senior citizen, up to 5 lakh rupees income is exempt and rebate can be only available if your income is up to 5 lakh rupees. So practically a super senior citizen cannot claim rebate under optional tax regime ever. Okay. Now rebate will be provided before calculation of cess because cess would be applicable at the end after rebate and surcharge provision. Now surcharge is 10% on tax if your total income exceeding 50 lakh up to 1 CR. So if your total income up to 50 lakh, no surcharge. If your total income exceeding 50 lakh up to 1 crore, the surcharge would be 10% on tax. So surcharge is not on income. what would be your tax upon that surcharge would be applicable. I will give you an example. If your income exceeding 1 crore up to 2 crore, then surcharge rate be 15% on tax. If your income exceeding 2 crore but up to 5 crore, it would be 25%. If your income exceeding 5 crore, your surcharge rate would be 37%. You can see it. Surcharge 1 crore, 50 lakh, 10%. Then it's 15%, then 25%, then 37%. Health and cess, always 4%. Now suppose your income is 60 lakh rupees. You are in C category. So now if you are in C category, up to 2.5 lakh is going to be exempt out of the 60 lakh. Then balance 2.5 lakh at the rate of 5%. That means 12,500. Next 5 lakh at the rate of 20%. That means 1 lakh rupees. So this is up to 10 lakh rupees. The balance, which is over 10 lakh rupees, out of the 60 lakh rupees, 10 lakh treatment has been done. Balance would be 50 lakh, which is going to be taxed at the rate of 30%. That would be 15 lakh. Now this 15 lakh total tax would be 16 lakh 12,500. Now can you tell me whether rebate would be applicable or not in this case? सुमित सिंह, स्पेशल रेट हमें सभी के रिस्पेक्टिव चैप्टर में ही स्टडी करनी है. यस, एग्जैक्टली. Yes, 5 lakh is under optional tax regime, Mithali, because under default tax regime, it's 12 lakh rupees exemption. We will discuss that. Yes, absolutely right. Rebate applicable nahi hogi because income is exceeding 5 lakh rupees. So rebate could be applicable only if income is up to 5 lakh rupees in optional tax regime. So rebate would not be applicable. But surcharge would be applicable because income exceeding 50 lakh rupees up to 1 crore. And what would be the rate of surcharge? The surcharge rate would be 10% of tax value, not on income, it's upon tax. That means 1612,500, the surcharge would be 161250. Now add this tax and surcharge, the total value on which 4% cess you need to calculate. So that would be your total tax. After including surcharge, you have to calculate the cess, and after including that cess, the final tax liability would be there. So you have seen that in case of optional tax regime, there are 3 categories, A, B, and C, in which you have to see what is the basic exemption limit is applicable. So one more example. Suppose there is Mr. C, age is 85 year, resident, fine, and total income is 6 lakh. So he will fall in A category. Now if you will see up to 5 lakh, out of this 6 lakh rupees, up to 5 lakh is exempt. So only 1 lakh will fall in this category and the rate would be 20%. So tax would be 20,000 rupees. Whether rebate would be applicable, the answer would be no. Because up to 5 lakh rupees, only rebate can be applicable. So it's 6 lakh rupees, there would not be any rebate. So that was optional tax regime. Now, in case of default tax regime, it's very simple. It says whether you are an individual, HUF, AOP, BOI, AJP, resident, non-resident, any age. So as in case of optional tax regime, you having three category for individual HUF, AOP, BOI, AJP. In case of default tax regime, there's only one case. In all these cases, the fixed basic exemption limit is 4 lakh rupees. Whatever age it is, whether you are a resident, non-resident, does not matter. The basic exemption limit is 4 lakh rupees. So up to 4 lakh, no tax. For next 4 lakh, the rate is 5%. Then for next 4 lakh, the rate is 10%. Then for next 4 lakh, the rate is 15%. Then for next 4 lakh, the rate is 20%. Then is next 4 lakh, the rate is 25%. And the balance, the rate is 30%. So that means up to 24 lakh, the slab rate change. On every 4 lakh, the rate has been changed. And after 24 lakh rupees, on the balance income, the taxability would be at the rate of 30% directly. Suppose the income is 30 lakh rupees. Then from first 4 lakh, the tax would be nil. The next 4 lakh, it's 20,000. The next is 40,000. You will see in every category, the tax would increase by 20,000. Now 60. Now 80. And now 1 lakh. Now balance 6 lakh rupees on which the rate would be 180. So your tax liability would be 4 lakh 80,000. So this regime we have to choose. It would be given in the question that which regime you need to follow for the purpose of solution. The question will ask you that you have to calculate tax as per optional or default tax regime or via both. So if the question is silent, you need to calculate tax with both regime. Okay. Golty and saying, sir, surcharge and rebate provision remain same for all categories. Yes, this would be same for all categories. In real life, do we choose? Yes, in real life, we choose which is more beneficial to the assessee. We calculate tax via both method, and then we need to choose which is most beneficial or in which the tax could be minimized. Now, under default tax regime, there is very interesting concept of rebate. In case of optional tax regime, the rebate concept was very easy. It says, if your total income is up to 5 lakh rupees, you could have the rebate of 12,500 rupees or the amount of tax, whichever is lower. But in case of default tax regime, there are two rebate concept applicable. It says rebate is 60,000 rupees or the amount of tax, whichever is lower. So you will see in case of default tax regime, if your income is up to 12 lakh rupees, you can see that 444, your tax would be 60,000. So if your income is up to 12 lakh rupees, your tax would be 60,000. So of course, with the help of the rebate, your tax liability would be 0. So that's why we call in new regime, the income is exempted up to 12 lakh rupees. That's a wrong statement. This statement can be given by those are not a chartered accountant or those not pursuing this course. So technically the exemption limit under new tax regime is 4 lakh rupees. No 12 lakh rupees exemption limit is there. Yes, the tax would be nil if your income is up to 12 lakh rupees due to the effect of rebate. So if someone asks you from today onwards that whether under default tax regime, 12 lakh rupees exempted? The answer would be no. The exemption, the basic exemption limit is 4 lakh rupees. But the effective tax would be nil up to 12 lakh rupees due to the rebate concept. Understood? Now, as in case of optional tax regime, the rebate was 12,500 if up to 5 lakh. Exceeding 5 lakh rupees, there would not be any rebate. Correct? That would be same in case of default tax regime. That if your income is up to 12 lakh rupees, you can take the rebate. And if it exceed, you should not have any rebate. But in case of default tax regime, even if your income exceeding 12 lakh rupees and it is exceeding 12 lakh rupees, you can have rebate. You can claim rebate even if your income exceeding 12 lakh rupees up to. If it is exceeding 12 lakh rupees, but if it is up to 12 lakh 70,580 rupees. This is a specific value you can learn. If your income under default tax regime is up to 12 lakh, you can claim the rebate up to rupees 60,000. But even if your income exceeding 12 lakh, but up to 12 lakh 70,580, how we calculate this 12 lakh 70,580, I will explain you, but please learn it. So in the examination, you will understand, do I need to calculate the rebate or not? If income exceeding this value, in case of default tax regime, if your income exceeding this value, 12 lakh 70,580, then you do not need to calculate the rebate. Rebate would not be applicable. But if the income is exceeding 12 lakh, you have to calculate rebate as per special provision. What are those special provision that we are going to discuss? Before that, till now, whatever we have discussed, we have to go through it. Sumit is asking, sir, what is section 111A, 112, 112A? These are special rates of income, capital gain taxability, 12.5%, etc. So that is going to be discussed in capital gain chapter, etc. Okay. This is relevant also for the purpose of surcharge provision. So we will discuss how it affects our surcharge concept. Now understand why if someone on 12 lakh, they not pay tax. Very good. Why this number government takes 1270? No, government does not take this number. I have calculated for your benefit because for the purpose of examination, if the total income has been given more than 1270,580, then you will not waste your time to calculate the rebate. Government does not describe it. I have calculated it that up to which level this rebate would be applicable. You will understand when we will solve this part of question. So that will save your time in the examination. Mr. Kambiraka is asking, sir, if income is 1 crore 1 lakh, the surcharge increased 10 to 15% because of rupees 1 lakh. So any relief to make lower the burden of tax, there is a concept of marginal relief that we will discuss after that, but a surcharge rate would be 15%. But there is a concept of marginal relief, we will discuss it. Dhanlakshmi, for firm LLP rate, 30% is applicable. Yes, Dhanlakshmi, as I have already told you multiple times, please focus what we are discussing right now. We are discussing about the rate for individual, etc. The firm LLP rate already given in the notes. We will discuss it later. Sir, surcharge कौन से amount calculate करता है? In Hindi explain. सरचार्ज कौन से अमाउंट कैलकुलेट करता है? सरचार्ज जो टैक्स आपका बनता है, अगर आपकी इनकम 50 लाख से ऊपर है तो जो भी टैक्स बनेगा उस पर सरचार्ज आपको कैलकुलेट करना है. अभी हमने उसका एग्जांपल सॉल्व किया तो था 60 लाख रुपीस की इनकम पर मैंने आपको शो किया है. मे बी आपने मिस कर दिया, आप उसको दोबारा देख लीजिए एक बारी. मिस मैक इज सेइंग डिफॉल्ट केस 1, इनकम अप टू 12 lakh, rebate applicable but exceeded not rebate. Case 2, exceed 12 lakh up to 1270580, limit rebate applicable. Exceeding 1270580, no rebate. Yes, exactly. This 1270580 will save your time. I'm telling you, if this limit has been crossed, you need not to calculate rebate. Yes, visuals, this rebate concept up to 12 lakh is applicable to all under default regime. Up to 12 lakh income, you have to give the rebate up to 60,000 amount of tax, whichever is lower. If income exceeding 12 lakh rupees, and if it is up to 12 lakh 70,580, then you have to calculate rebate as per a different method, what we are going to discuss, of course, in some time. Moving on to the notes. This is default tax regime concept. And of course, the rates has been given over here. These are special rates of taxes. These are going to be discussed in the respective chapters. So on these income, these rates does not applicable. These 5, 10%, etc. These are not applicable in these specific incomes. So up to 4 lakh, it's nil, 5% you can go through it. If you want to opt for default tax regime, there are certain deductions, etc. you have to leave. You cannot take the benefit of these deduction if you want to go into the default tax regime. Again, these certain deduction exemptions are going to be discussed in the respective chapters because these are connected with salary, house property, PGBP, deductions chapter. So you will understand which kind of benefit we have to leave if we need to go under the default tax regime, not relevant for this basic concept rate of tax chapter. Now the surcharge provisions are same for default tax regime and optional tax regime. There is only one difference. In case of surcharge provision, there is only one difference under optional tax regime and default tax regime. The difference is there is up to 50 lakh no surcharge in both cases, whether you are under optional tax regime, OTR, or you are DTR, default tax regime. Same concept. 50 lakh, 1 crore, 10%, same. 1 crore, 2 crore, 15%, same. 2 crore, 5 crore, 25%, same. More than 5 crore, the rate of surcharge is 37%. But in case of default tax regime, it will remain 25%. So there's only one difference in case of surcharge provision under optional tax regime and default tax regime, that in case of default tax regime, the maximum surcharge rate would be 25%. There is no 37% surcharge rate applicability. If income exceeding 2 crore, it will be 25% always, whether it's exceeding 5 crore, 10 crore, etc. So this is one difference between surcharge provision of optional tax regime and default tax regime. These provisions would be discussed in return filing topic, so no need to read them. In separate chapter we will discuss, you can see it has been mentioned in return filing chapter. This is also going to be discussed in return filing chapter. This is for AMT. This is also going to be discussed in last chapter. Now the rebate concept. We need to discuss the rebate concept of default tax regime. This is over here. So rebate for resident individuals. In order to provide tax relief to individual taxpayers, Section 87A provides a rebate. Rebate to resident individual paying tax under default tax regime. So there are two concepts. One is if income does not exceeding 12 lakh rupees, the rebate would be the amount of tax or 60,000, whichever is lower. Now suppose if income exceeding 12 lakh rupees, then still you can have the rebate, but you have to calculate it with the help of a formula. And if the condition satisfied, then you can claim the rebate. Now read these steps. It says an income tax payable on such total income exceed the amount by which the income is excess of 12 lakh. The rebate would be as follows. Now step number 1 you have to follow. The total income reduce 12 lakh rupees. That would be your step number 1 value. Total income less 12 lakh rupees. Suppose in the question, total income has been given 12 lakh 50,000. Now, as per point number 1, you cannot claim the rebate because income exceeding 12 lakh. But as per point number 2, there might be rebate applicable. So step number 1 says total income which has been given in question less 12 lakh rupees. This is fixed limit. You have to reduce it always. So step A is 50,000. Clear? Now compute income tax liability on your total income. So whatever total income has been given in the question, calculate the tax liability on this income. So now if you calculate the tax on 12 lakh 50,000, that would come 67,500. Like up to 4 lakh rupees, first 4 lakh rupees, no tax. Next 4 lakh rupees, 5%, that means 20,000. Next 4 lakh rupees, 10%, that means 40,000. Then balance is 50,000 left. Up to 12 lakh is this one. The balance is going to be taxed at 15%, 7,500. So total tax would be 67,500. So step 1 says total income reduce 12 lakh rupees, step A. Step 2 says calculate tax on your income which has been given in the question. That would be called B. If B is greater than A, so you have to check this condition. If B is greater than A, if B is more than A, then you can claim the rebate. If B is not more than A, then you cannot claim the rebate. So in this example, you can see B is more than A. Step number 3 says if B is more than A, 67,500 is more than 50,000. Then you can claim the rebate, and the rebate would be B minus A. That means 67,500 minus 50,000. This would be your rebate, 7,500. What we will do with this rebate? We will reduce this rebate from my tax liability. So how much was the tax liability? 67,500. Now the rebate would be 7,500 and the tax would be 60,000. Now you can apply cess on this 4% cess. So the limit, as I have mentioned you, that was 12 lakh 70,580. So I have calculated multiple times and I have seen up to 12 lakh 70,580 rupees. The B would be greater than A. As soon as the income will exceed 12 lakh 70,580, the B will not be greater than A. You can calculate it yourself. Take the income 12 lakh 70,600 and apply these A and B, and you will see B is not more than A. So I have calculated 5 and 6 times and I find it out that up to this value, the B will be greater than A. So that's why in the examination, suppose there is income has been given 12 lakh 80,000. So you will not waste your time for calculation of rebate. You can directly write it down, no rebate applicable. If the income has been given 12 lakh 65,000, so you know, yes, rebate would be applicable. So you will spend your time for calculation for the purpose of rebate. So this has been find it out like this. Okay, so it has not been given in the study material, not has been given in the act, but it has just been calculated by me for your help. So it will save your time in the examination. So there's a question also over here. Mr. Pawan, age 35-year resident, total income 12 lakh 15,000. And now you can see 12 lakh 15,000. So it's less than 12 lakh 70,580. So rebate would be applicable. So step number 1, income minus 12 lakh. A. Calculate tax on 12 lakh 15,000. So the tax is 62,250. You can see B is more than A. If B is more than A, then what is the rebate? B minus A. That is the rebate. So you can see the rebate is B minus A, 47,250. That is going to be reduced from the tax, and the balance would be your tax. 15,000 plus cess, that is your tax liability. 15,600 rupees. I hope it's clear. Now let me tell you, in every numerical chapter, there is a problem, or you can say there is a thing which is always inherent in it. Even if you are able to learn all the provision correctly, even if you remember everything, all the concept, how much tax rate need to be applicable in which case, but you won't be able to understand the concept until you practice numerical. So whatever we are discussing today, I will give you some homework, some questions from study material, etc. And when you will practice it, then you will understand, okay, this concept run like this. So in every numerical topic it happens, until you will practice, until you will revise the provision, you won't be able to understand the provision correctly. Okay. Pintu Sony wants to ask something. Let me see, is there any? Understood. Visual Arora. Yes, Visual.
Sir, in the question which you explained, sir, the rebate would be 17,500 when B minus B minus A, and you have written 7,500.
Yes, yes, sir. Correct. 17,500. That is by mistake, correctly.
Yeah. Thank you, sir.
Let me correct you, students. Exactly. That was a calculation mistake. That is going to be 17,500. Absolutely. Correct. This is 17,500. So our tax would be 50,000. Okay. So now we are moving on to. Yes, Visual. Correct. Very correct. Now, there are some points you need to revise yourself. We are going to discuss in a short way. So these were the rates of tax in case of individual, HUF, AOP, BOI, etc. Sumit wants to ask something. Sumit, let me see. Yes, Sumit.
Hello sir, good morning.
Good morning.
सर 1 पॉइंट मॉड्यूल के 1.67 पेज नंबर में एक सरचार्ज का चार्ट दिया है मॉड्यूल में। उसमें लिखा है ना, वह टोटल इनकम एक्सक्लूडिंग डिविडेंड इनकम सरचार्ज रेट दिया है 37%, मीन्स 5 करोड़ से अगर एक्सीड होती है तो 37%, बट देन नीचे उसके लिखा है रेट ऑफ सरचार्ज ऑन द इनकम टैक्स पेबल ऑफ द पोर्शन ऑफ डिविडेंड नॉट एक्सीडिंग 15%। सर ये पॉइंट मेरे को समझ नहीं आता।
अभी ये पॉइंट हमने डिस्कस ही नहीं करा है, तो समझ कैसे आएगा? देखो,
सर सरचार्ज आपने बताया था ना अभी 37%।
We have just discussed surcharge on normal rate of taxes.
Oh,
If special rate of taxes has been included, then surcharge concept will change. You can see the
okay.
diagram right now in the screen I have just shared. So I have already prepared the surcharge diagram for those special rate of tax. You can see over here, like if income of dividend, etc. included, the rate of surcharge would change. It would be 15% in this case. It would be 15% in this case. So I will discuss it because first of all, we have to understand the rebate concept.
Okay, sir. Thank you.
It will be discussed. Do not worry. I will cover each and everything. Nothing is going to be left. So we just focused on rebate concept right now and the basic surcharge rate, which is on normal income. On a special rate of income, surcharge would change. So examples also over here in both cases, default tax regime, etc. So we will discuss it.
Okay, sir.
Okay, so we are moving on to okay, so there are rates for other than individual HUF, AOP, BOI, AJP. As you can see, the good thing, there is no slab rate in this case. So there would be a single rate. Now you can see as point number 2, in case of partnership firm and limited liability partnership, whether you are under default tax regime or under a normal tax regime, the rate would be same in other cases. It's 30%. So if you are a partnership firm or LLP, the rate would be 30% fixed. So if you're earning 1 lakh, no basic exemption limit. So you're a partnership firm, you earn 1 lakh rupees. The tax would be 30,000. If you're earning 10,000 rupees, the tax would be 3,000. And the surcharge rate also single. It would be 12% if your total income exceeding 1 crore rupees. So the complex situations of surcharge, rebate, and these rates is only in case of individual HUF, AOP, BOI, AJP. So what do you think? Which kind of tax examiner should ask in the examination? In case of partnership firm or in case of individual HUF, etc. category? What do you expect in the examination? What kind of tax calculation would be expected from you? Mehak, illustration 10, surcharge, etc. We will discuss. Do not worry. Not partnership, it would be individual, etc. Because that is complex situations. In case of partnership, company, etc., that is very simple. Because the rate is 30%, surcharge is same, no rebate is applicable. So it would be really easy to calculate tax. Of course, the special rate would be applicable. That is going to be discussed in respective chapter. Now there's a concept of marginal relief also. That also we will discuss later. What is marginal relief? We will understand that marginal relief concept first in case of individual HUF, etc. Then we will automatically understand how to calculate marginal relief in case of partnership from an LLP. The cooperative society rates, because this is not in your syllabus, so you just can read out the rates of cooperative society, not the calculation of tax would be there for the purpose of examination. That would be final level provision. So just need to go through it. So go through these provision again for companies also, the tax calculation would not be there. So they're just going to read these provision, the rate that would be in final level. So they just give you a trailer that these are the rates because you should know what is the rate structure, but the calculation level would be at final. So the company, etc., provision rates, you need to just go through it, not for the calculation purpose, just for your reading purpose. Okay. So these provision we have discussed. Now we have left with one important concept is concept of marginally, and one is surcharge. So these surcharge detail provision and marginally that we will discuss in the next class. Before that, now I am giving you some questions for the purpose of calculation. Kindly write it down. This is your homework. So we will discuss those questions. And as soon as you will solve these questions, I assure you, you will understand the chapter and the provisions with more clarity. So kindly write it down that illustration number 3 in your study material, page number 1.56. Fine. Illustration number 3 is your homework. Illustration number 4. That's it. Other illustrations are connected to your surcharge liability. Okay, illustration number 9 also you can do. Illustration 3, 4, 9. Illustration number 10. Illustration number 11. Others are related to surcharge provision and agricultural provision. So if you're able to solve these questions, you will understand this chapter in a better way. Okay, so any other query? Visual is saying, sir, in case of LLP partnership, no regime. Regime is the default tax regime and optional tax regime only for that individual, etc. category. For partnership firm, for company, etc., there is no default because there is no slab rate concept is there. There's only single rate is there. So no default, no optional. Okay, so this is our now story time. So there is going to be a short story for all of you, and the story would be in Hindi. Sumit raised her hand. Sumit, you want to ask something? I think no. Okay. So short story, then we'll wind up our session. तो एक बार क्या हुआ कि दो दोस्त थे, दो चूहे थे, एंड दे वर फ्रेंड्स. एंड वो उनमें से एक थोड़ा सा आलसी था और एक थोड़ा सा मेहनत करने वाला था. तो दोनों अपना रोज काम करते थे, मेहनत करते थे, एंड दे विल हैव देयर फूड्स. एक बार जाते जाते उन्हें एक रास्ते में साधु बाबा मिले. उन्होंने उनकी काफी सेवा करी, तो साधु बाबा ने दोनों से पूछा कि तुम्हें क्या चाहिए, तो उन्होंने कहा हम चाहते हैं हमें खाना वाना आराम से मिल जाए करे। तो उन्होंने एक जो थोड़ा सा मेहनती था चूहा, उससे पूछा कि क्या ऑप्शन लेना चाहोगे। दो ऑप्शन है, या तो फ्री में खाना मिलेगा, जितना चाहो उतना मिलेगा बिना मेहनत किए, और दूसरा ऑप्शन है फूड मिलेगा, जितनी मेहनत करोगे उस हिसाब से, कम मेहनत करोगे कम मिलेगा, ज्यादा मेहनत करोगे ज्यादा मिलेगा, अच्छा मिलेगा, जितनी ज्यादा मेहनत करोगे उतना मिलेगा। तो उसने सोचा और उसने कहा मुझे चाहिए सेकंड ऑप्शन, कि जितनी मेहनत करूंगा उतना मिलेगा मेरे को। जो उसका दोस्त था उसने कहा "अरे ये क्या मांग रहा है, ये तो गलत है, हमें तो फूड चाहिए ना, तो हम ऐसा वाला ऑप्शन लेते हैं कि हमें आराम से फूड मिले, हमेशा मिलता रहे बिना मेहनत करे हो"। तो उसने कहा नहीं नहीं, तुम भी ये वाला मत मांगना, तुम मेहनत वाला मांगना, सेकंड वाला। तो जब साधु ने सेकंड वाले से पूछा, जो थोड़ा सा आलसी था, तुम्हें कौन सा ऑप्शन चाहिए, फ्री में फूड चाहिए बिना मेहनत करे, जब चाहो जितना चाहो सारी लाइफ लॉन्ग का, या फिर मेहनत करने के हिसाब से चाहिए। तो उसने अपने दोस्त की बात नहीं मानी, उसने कहा नहीं मुझे पहला वाला ऑप्शन चाहिए, आई वांट कि मैं जितना फूड चाहे जब चाहे तब मुझे मिल जाए, एंड उसने वो ऑप्शन ले लिया। दोनों जब घर वापस आए तो जो सेकंड वाला था, आलसी वाला माउस, उसको घर पे पहुंचते एक बहुत बड़ा ड्रम मिला, और उसमें वो सारा खाना था। तो ही जम्प्ड इनटू इट, एंड उसको कुछ नहीं करना पड़ता था, वो दिन भर उसमें पड़े पड़े खाना खाता रहता था। और जो थोड़ा सा मेहनत वाला माउस था, वो रोज मेहनत करता था, जितनी ज्यादा मेहनत करता था उतना उसे अच्छा और खाना मिलता था। धीरे धीरे जो आलसी वाला था वो फूड खाता रहा, हेल्दी होता रहा, मोटा होता गया, कुछ काम नहीं करना पड़ता था। जैसे जैसे वो ड्रम में उसके लाइफ लॉन्ग तक का खाना था, वो ड्रम आधा जब खाली हो गया, तो वो इतना मोटा हो गया कि उससे बाहर ही नहीं निकल सकता था। एंड ही गॉट इल, वो सिक हो गया, क्योंकि बहुत आलसी था, कुछ काम ही नहीं करता था, एंड धीरे धीरे उसकी डेथ हो गई। जो मेहनती वाला था वो फिट रहा लाइफ लॉन्ग तक, जितनी मेहनत करी उतना उसको रिजल्ट मिलता रहा। यही हमारी लाइफ की चॉइस है एज ए स्टूडेंट। आप अपनी लाइफ में क्या चॉइस चाहते हैं? इजी लाइफ फ्यूचर में आपको परेशान करेगी लाइफ। अगर आपको लगता है कि अभी 3-4 साल पढ़ाई नहीं करते हैं, ग्रेजुएशन कर लें, बीकॉम कर लेते हैं, तो आगे की जो लाइफ है ना वो बहुत डिफिकल्ट हो जाएगी। एंड अगर अभी 3-4 साल आप मेहनत करोगे, अभी सेक्रीफाइस करोगे सीए करने में, अपनी फैसिलिटीज को, अपने पार्टीज को सेक्रीफाइस करोगे, तो फ्यूचर आपका बहुत अच्छा रहेगा। तो इसीलिए बीइंग अ स्टूडेंट अपनी लाइफ में वो चॉइसेस लीजिए जो थोड़ी डिफिकल्ट है, जो आज मुश्किल है लेकिन उससे फ्यूचर बेटर हो जाए। एंड अगर ऐसी कोई चॉइस आप लेते हो जिसमें आज चीजें आपके लिए इजी हो जाएंगी, पढ़ना नहीं पड़ेगा, ग्रेजुएशन इज वेरी इजी, कॉलेज लाइफ एंजॉय सभी करना चाहते हैं, बट दैट वुड नॉट सॉल्व योर फ्यूचर प्रॉब्लम। सो प्लीज बी फोकस, 3-4 इयर्स अच्छी तरह पढ़ाई कर लो मेहनती चूहे की तरह, एंड उसके बाद लाइफ लॉन्ग इजी लाइफ मिलेगी विद लॉट ऑफ मनी, लॉट ऑफ रेस्पेक्ट एटसेट्रा। So that was a story for all of you. If there's any query, students, you can ask as we are going to close the session. Welcome back. Sridhar is asking, sir, only individual can opt? Yes, only individual has option to go for default tax regime or optional tax regime. Okay. So please revise the provision. When we will see each other, there will be MCQ questions and we will solve margin relief concept, surcharge concept in detail, and agricultural income provision. That is going to be discussed in the next session of basic concept. Cess is applicable in all cases, Sushmita. All cases. If there is tax, there would be cess. Good. So in the next session also, I would love to ask someone to explain provisions, what we have discussed in session 2 in short. So Sanket ji, can we close the session now? Yes. Thank you.